Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Chris Batchelor, and we're talking PWR Holdings, ASX code PWH. G'day, Chris. How about this company? It's a real backyard garage story come good, isn't it?
It is indeed. It's a great story that comes out of Australia and now dominates the world in terms of its area of expertise. Founded on the Gold Coast back in 2003 by a very enthusiastic chap called Keys Wheel, and it's grown into a billion-dollar company.
And it's a very cool company, isn't it?
Yes, in every sense of the word. So what they do is they manufacture advanced cooling systems. And think motorsport traditionally, that's been their, where they cut their teeth, their most dominant market. And think Formula One, NASCAR, supercars, touring cars, rally cars, Indy cars, pretty much anything that has an engine, they're likely to be using PWR cooling products. And in fact, they really dominate all of those sports to the point where every Formula One team uses their products to provide the cooling for the cars.
That's pretty amazing, isn't it, for a company like that out of the Gold Coast? I mean, I was reading a little story in their annual report that there's a restaurant in Italy which has got this wall of components from different Formula One cars, and their radiator assembly has been given a place on this wall of fame.
Yeah, right. Hadn't read that story, but yes. Yeah, it is amazing. They've really cut an amazing niche in those sports.
And apart from motorsport, there's defence, aerospace, electric and hybrid vehicles, the performance aftermarket, renewable energy and industrial. I mean, it's an incredible story for this company.
Yeah, that's right. So they've really managed to diversify their revenue sources over the last few years. I mean, I should say at the start, I own this company and I've owned it for about 6 years. And when I was first looking at this company, they were about 2/3 of their revenue coming from motorsport. Now, that motorsport revenue has continued to grow and it's grown very strongly. However, it's now about 48% of total revenue. And the reason for that is that they've diversified into all those areas that you mentioned. I mean, their second biggest area now is original equipment manufacturers. So that's where car manufacturers are producing cars, usually high-end cars, think hypercars, performance vehicles, things like the new AMG X1, the Ford Mustang GT 500, lots of vehicles that require, they're performance cars, obviously, and so they require really good cooling systems. And so PWR managed to get contracts with manufacturers and, providing those componentry. And some of those are really big contracts, so they've become a significant part of the business as well.
So they're small, but they're still in the ASX 300, so kind of mid-tier kind of company, aren't they?
Yeah, that's right. I mean, as I mentioned, billion-dollar company, that's based on market cap. They're $1.1 billion in market cap. But if you look at their revenue, it's actually they're expecting around 146 million for this year that's just ended, but we haven't yet heard the results, of course. So when you think about that market cap compared to those sales, it's actually a really big gap, which talks to the value, which I'm sure we'll get onto. But yeah, they're still a small player, but they're certainly growing.
Yeah, because the value score on Stockopedia is quite low again, but it scores highly on quality and momentum. There seemed to be a bit of up and down movement in the share price over the last year or so. Can you tell us about that?
Yeah, there has. It's an interesting one in that, as you said, the value score is really low, and that's because it's been growing so strongly and the quality score is so strong. I mean, just looking at that revenue, I said, almost 150 million for this year. Only 5 years ago, that was 50 million. So, they've tripled their revenue over that period. The share price fluctuates a fair bit because, there's uncertainty as to, well, what is this company really worth? It's priced as a really high growth company, but how long can it continue to grow at those sorts of levels? And that's a question that's unanswered at the moment. But it's certainly very expensive, and that reflects the fact that it's grown at such a rapid rate.
Sorry, I derailed you a little bit in that question, but we were also going to talk about the quality and momentum scores, which are quite high.
Yeah, all right, let's start with quality. So quality is based on things like the return on capital, the return on equity, the operating margins. So they're getting returns on capital and equity in around the 30% sort of level. These are very high scores, and that's not just one-offs. They've been getting that consistently for many years. Their operating margins, 26%, really strong margins. And so these factors are really contributing to that high quality score. And of course, the growth that we have talked about year after year after year. And then turning to momentum, first of all, let's look at the two components to momentum. There's the momentum in the earnings per share, and then there's the momentum in share price. So if we look first at the earnings per share, that's been steadily increasing. And by that, I don't mean the actual numbers, I mean the expectations of analysts for what the future earnings per share will be, that analysts have been gradually upgrading their expectations. So that's a positive contributor to momentum. The other is the share price. And as you said, it has been a bit volatile over the past year. But if you compare, from the start of the year to the end of the year, taking out the volatility, it's up 23% relative to the market. So it's been a strong outperformer. And that's why you're seeing that high momentum score of 95 currently.
And this is a founder-led business, which we always like to hear about. The co-founder, Kees Wheel, who's won multiple Australasian safaris, which I believe is a motor racing sport, he's got a great moustache, and then his brother as well. So tell us about that aspect of the business.
Yeah, as you said, a man who's very passionate for the industry, involved in motorsport personally. And yeah, he founded the business. He owned a large chunk of it. He's gradually been reducing his holdings, but he still owns about 17% of the business, which is now worth around $200 million in stock. He's also, I believe, from what I've listened into the earnings calls, he's a real sort of down-to-earth Aussie bloke. And I believe he has a very good rapport with staff. They've got a very good staff culture. They have things like the Wheels Cafe in their plant up in Gold Coast. Employees can eat for free at the cafe and so on. So yeah, he's built a really good culture, and he's obviously passionately involved in the business, leads the business from the front, and has a major stake in it.
Let's talk about the PEG ratio for this business. Now, this is not something we've covered for quite a while on the podcast, but this particular ratio lies at the heart of Stockopedia scores.
Yeah, it's certainly a contributing factor. So the PEG ratio, just to explain, you've got three letters there, right? P, E, and G. So it stands for PE growth ratio. So what it looks at is it takes the PE ratio and then it divides that by the earnings per share growth figure. And what you're looking for is a score of 1 would mean that the PE ratio is the same as the growth ratio. So say the PE ratio is 10 and it's growing at 10% per annum in terms of the earnings per share, then that would be a score of 1. And the sort of rule of thumb is that 1 represents value, more than 1 is starting to get expensive, and less than 1 is cheap. So in the case of this company, it's 2.4. I mean, we've already talked about the fact that it's expensive, and that's just another indicator that points to that.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. I love hearing about these companies, though, that, like down-to-earth Aussie businesses that are able to operate at the highest levels of quality and skill and innovation, like Formula One, for example. I mean, that's not for any kind of laggard there, are they?
No, that's right. And it's worth pointing out, it's a down-to-earth Aussie business based in the Gold Coast. They are now a global business. They have a large operation in the US, which was set up a number of years ago. And they've just recently, over the last 12 months, expanded into the UK. They've always had a very strong presence in the UK in terms of sales, but they didn't actually have any manufacturing facilities in the UK. But now they do. And yes, they are indeed a global business, and they generate their revenue Perhaps surprisingly, their biggest market is the USA, followed by the UK, then Italy, and then finally Australia. So whilst founded on the Gold Coast, they're now truly a global business.
So, Chris, tell us about those other areas apart from motorsport that they derive revenue from.
Yeah, so as we mentioned, they've started to expand and diversify their revenue, and we talked a bit about the OEM market, but there's also the automotive aftermarket. So that's, you think you buy your top of the line four-wheel drive or your sports car, and you want to make sure it's got the best equipment. And so you may go along and say, I want a new intercooler, particularly for people that really like to push their cars, doing a lot of outback travel or something like that. So they have a big market in that. It's around, I think, 17% of their overall revenue is in that space. And the other area that's still relatively small but growing rapidly is the aerospace and defense market. And that grew by 124% in the last half-year period, but still only accounts for about 12% of the total revenue. But that's things like, think drones, think those, what do you call them, EV tolls, those vertical takeoff electric vehicles, which don't, not currently flying our skies, but apparently they're very close to becoming mainstream in China. Some of those really sort of high-tech things where cooling is really important. In fact, EVs in general, cooling is a really essential part of an EV. They need to keep the batteries at a cool level so that they operate efficiently. And they're really paving a way in that space and really, get cutting edge technology there. They've also sort of divided their
Sorry,
revenue.
just if I could just interrupt you just there for a second. That must be interesting because I was going to ask you, why do you need a radiator in an EV? But obviously this is new technology is working out how best to cool batteries as well. So I guess that's part of the innovation that they're providing.
That's right. And they're very innovative, and they divide their revenue into what they call advanced cooling and emerging technologies. And that emerging technologies component is really growing quite a lot. And that's things that, it's really high tech, and I confess I don't really understand it, but a lot of it's like 3D printed manufacturing. It's these cold plates. So they use cold plates to cool electronic componentry. And so that's where in drones or EVs or whatever, they're using that sort of technology basically to dissipate heat from the batteries and from the motors. They are very innovative. They're doing a lot of really cutting edge work. They've bought some really high tech equipment, and they've received quite a few government grants for a lot of that as well because of the sort of R&D component to what they're doing. And, things like hypercars like the Rimac Navara, the AMG X1, the Valkyrie Spider, lots of race cars, road cars as well. They're right there working with the design teams on these things to come up with the best solutions in terms of the cooling aspect.
You were talking about the growth and the incredible growth that this company's been through, and you kind of hinted that there might be some doubts that this can continue. Can you tell us about those doubts?
I don't think there's any real doubts around, well, the business is going to grow strongly, but obviously it's a niche market. So, how big can a company like this get? Oh, I don't know the answer to that, but there's obviously a ceiling, and their valuation has far outstripped their revenue and their earnings by many multiples. I mean, they're trading on a price to sales ratio of 9, let alone price to earnings. So, they're very expensive. And the reason they've gone down the path of diversifying is obviously motorsports is interesting and it's right at the edge of technology, but it's a limited market, right? It's never going to become mass market. So where the growth opportunities could be really large for them is if they get into more mainstream cars, mass market cars. They've done stuff like the Mustang GT50, but we wouldn't really call that mass market, but it's more mass market than a Valkyrie Spider. If they can get into, for particularly EVs, if they can really get an edge in that market, and if, as many pundits predict, EVs become the dominant type of motor vehicle over the next decade or so, then there's potentially a huge market for them.
So, looking forward, what do you think of the outlook for this company?
Yeah, well, as I said, I hold it, and I think it's a really great company, and I'm happy to hold it. I mean, just looking at the analyst forecasts for this coming year, well, we're at a funny point in time. The forecasts are for FY24. Now, FY24 has actually ended, but we don't know the numbers, so analysts are still forecasting what they expect for that time, and they're forecasting growth in earnings per share of 27% for FY24, so very strong growth, and then a further 18% in FY25. So, the market certainly likes it. They put some slides in their presentation about their pipeline, and it's a really strong pipeline. Over the next 3 years, they have a whole bunch of programs lined up in OEM, some of those names that we mentioned, and then a lot, they say undisclosed, but they've clearly got all these different programs lined up. And also in motorsport, different contracts to work on different elements of motorsport as new developments are always taking place in that industry. And likewise, they have over 40 programs in the pipeline for the aerospace and defense category. So they've got a really solid pipeline of work, and my personal view is that this is a really strong company that's likely to keep growing. The valuation is always tricky to comment on once you get into those sort of stratospheric levels. But in terms of the quality of the business, the other thing we haven't touched on yet, but when we talk about quality, it's always good to talk about the balance sheet. Their balance sheet is really solid. There's no debt. They've got lots of cash. They've got finance facilities lined up that they can draw on if required, but so far they haven't been required to draw on them. They have really good cash flow. So, strong business with a strong pipeline. I think the outlook is looking really positive.
Chris Batchelor, thank you very much for joining me today.
Thanks, Phil. Always a pleasure.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.